Talked about tax reform some, but let's really get into it now. The likelihood. We're going to get a bill, we hear, on Wednesday. They've gotten over the hurdle of the deficits. What stands between us and actually legislation being passed?
Sure. I think even though we're looking at a $1.5 trillion increase potentially in deficits, underlying that, we will have surpluses in 10 years. And that means we have pretty radical cuts to spending. So that's also going to be a big part of this conversation. And just taking a step back to the actual taxes, there's going to be a lot of contention over what actually the provisions are, whether they're fair, whether we're targeting the right groups of people, whether or not the tax provisions are only going to focus on your big corporations, those with heavy capital expensing, as well as your wealthy.
So as you look at the outline, because that's what we have so far, just the outline, as an economist, what are the things that would be most likely to drive growth, which is what the president says he's really after? What are the things that really drive that?
Sure. Well, the multipliers are actually the largest for things like infrastructure spending. But since we're just talking about tax reform...
Yeah, that's not in the bill, as I understand it.
Exactly. But since we're talking about tax reform, really lowering taxes for your lower and middle income persons gives you the biggest bang for your buck. And certainly for your small entities, your small businesses. Indeed, the multipliers are the smallest for your larger corporations. So it's really going to be about what's in this bill, who are we targeting here.
How do you pay for that as a practical matter, and what effect might that have on the economy? Some of the things we've heard about, like curtailing the 401k favorable treatment, things like taking expensing for capex, things like other things that have been said about saving money, basically.
Sure. Well, there are a number of ways to pay for tax reform. Number one, you can anticipate that your provisions will greatly expand real GDP growth. And indeed, that's what's embedded in the expectation. So, for example, President Trump expects that tax provisions can bolster GDP growth to 3% indefinitely. And certainly the House has talked about maybe bolstering GDP growth to 2.5% perpetually. And so certainly if you have faster growth, more businesses being created, more people being hired, you have more income tax revenue coming into the government.
And finally, what about curtailing the business interest deduction? Because that's something that is at least being discussed on the Hill.
Yes, indeed. At first, there was going to be a complete ban on that. And then I think senators, your more conservative, pragmatic senators said, look, we need to make this a little bit more amenable to your businesses like your financial sector, your tech sector. So you're going to have this partial deduction. So I think that'll be important to keep.
Dana Peterson.